Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on my trade regarding the Australian dollar, US dollar. And the question I'm asking is, should I take profit right now? Right, so I got in around here, and the question is to take profit or not to take profit around this level. So before I get into why I'm not looking to take profit at this area, this logical area, I'm going to walk you really through my process and the steps and how I trade, and hopefully you can learn something from this. So just thought I'd bring up the trades that I'm in at the moment. So the Aussie dollar short, right, I got in at this price and I am 158 pips up. The current trade prices there at the moment. So do we have, should I be taking profit now? And I guess a lot of traders would say yes, take profit now, take the 158 pips, but I'm not going to. So again, before I get into that, I have to rewind, right? And so how and why did I get into the Australian dollar, US dollar short, first of all? So if you have followed me for any length of time, you'll understand and you'll know that I am a fundamental and sentiment trader first, and I use the charts to really kind of time my entries. So one of the websites I use to determine my fundamental analysis is a site called Tradingview, right? Sorry, Trading Economics, not Tradingview, tradingeconomics.com. And at the top, you've got indicators. You go to countries. It brings up a list of countries, and then from there you can choose the countries, and I determine based on the overview, right? GDP, unemployment, inflation, etc. Right? The country's economic state and monetary policy state, right? And that's the US dollar at the moment, economic indicators, and there's the Australia economic indicators. So I'm comparing the two because I need to find obviously value, right? Depending on obviously what the monetary and economic indicators are saying, and if you want to basically trade how I trade, and if you don't know about fundamental and sentiment analysis, I have a free course, and the link is in the description box below, and I go over pretty much everything in there. And then if you click on the Google document spreadsheet, it will bring up a little spreadsheet here, and this will show you basically my fundamental analysis, not necessarily sentiment, but fundamentally the currencies I'm looking to buy and what I'm looking to sell. And pretty much I've been bullish on the dollar all year, and that hasn't really changed. Others have, and I choose my currency pairs from my fundamental analysis, right? So I'm not confused as to which way I should be buying and what currencies I should be selling and what currencies I should be staying away from, because if you've got a bullish currency pair against a bearish currency pair, you should see a trending market, right? So that's what we're really trying to do. Maybe stay away from maybe two conflicting currencies, depending on obviously if you're just looking to be a trend trader. It can be beneficial sometimes if you have two strong and two weak currencies, as the market tends to range. But ultimately what we're looking for is for what you should be looking for is strength against weakness. So with that in mind, I was bullish on the dollar, right? And the Australian dollar was actually, before I took the trade, I was neutral, slight bullish on this trade, right? So but my main buy was going to be on the dollar. So go to Tradingview charts, and what I'll do is I'll just show you that the analysis was done on my profile. You can search me if you go to the top. Instead of going to ticker, go to people and then search LEONROWE. Post all my charts here. So this was a chart that I posted on the 28th of November. This is the updated chart. But if you go to the recent chart, 9th of December, what you'll be able to see is you can go back on the chart to see past chart analysis. So if you click on that one, and this was basically the previous chart, right? Before obviously this happened. So then what we saw is prices obviously come up into this zone and then reverse, right? So it came up into the supply zone first, and what we're looking for, we have to determine value, right? And value is whatever you want to call it, whether it's, you know, a bargain area, whether it's a cheap area, whether you're buying at wholesale, etc. You don't ever want to be buying at retail, and that's what you're looking at with supply zones, the red zone. And then we look to add the supply and demand equation. So we're looking at forced and willing supply and demand orders, basically who's taking profit and who's entering new trades at levels around areas of horizontal, diagonal, and dynamic support and resistance. So as prices came up into this area, I was looking to be a seller, right? So let's just, you know, obviously fast forward to a couple of days, and prices did come up here, and I got short around here. Right, I'll bring up the exact price was, I think, 73.48, and I actually got in a bit late, matter of fact, on that one. But nevertheless, it was decent entry. I saw my trigger, just saw it a bit late, and I ended up getting in short, and I'll show you that a bit later. So again, we've gone over the fundamentals. Now let's go over the technicals and why I entered this trade. So first of all, we had obviously an area of supply that we came into, and then we had a level of support, resistance, and we did have an area of resistance, some diagonal resistance here as well, right? I didn't actually get involved, even though I was looking to get involved in here. I just didn't see an entry trigger around here. Otherwise I would have actually, you know, tried my luck here first before probably trying up here, but I just didn't see an entry trigger on around this area here. And then the weekend opened up, and unfortunately AUDUSD doesn't do gaps, right? So actually, matter of fact, before I get into that, sorry, I want to go into dynamic, right? So dynamic, you got the 2150, 100, 200. What we did have is we had one of the 200 moving averages that came into price. So we had a cluster of resistance around here, not only just horizontal, we had diagonal, and we had some dynamic resistance in this supply zone. So I was very interested in getting short. Now, as I was saying about the gaps, this actually gapped up, and when the charts don't show gaps, right? But if you're trading on any other charts that do show gaps, you would have seen a gap higher around here. So there would have been a lot of stops taken out, and what I like to do is I like to enter when there is some sort of manipulation, and gaps can be considered a potential manipulation. And what I was surprised at, and what kind of alerted me to the fact that there was a manipulation or ahead, going ahead of obviously at this level, right, on the 4 hour, right, was the fact that nothing news-wise, there was nothing newsworthy that warranted the dollar weakness, right, and the Australian strength over the weekend. So that was Friday, and then that was the 30th, and then from the 2nd, that was it. That was the gap candle, right? It's a gap candle, but on other brokers that would have been seen as a gap. So this candle shouldn't really be here, yeah. But anyway, there was obviously, you know, stops would have been taken out, right, from the gap, as there would have been, you know, traders would have been trading the highs at this level here, place stops above the highs here, right? And then what you had was a bit of more of a manipulation, as traders would have been trying to fade the gap, right? So you would have had traders, you know, trying to get short, probably somewhere on this candle here, right, and looking to fade this gap, right, as this is where prices would have closed on the 30th of November, and then this is where, let me move this out of the way slightly so you can see at the bottom where you got the 30th of November, and then you've got this candle here, which should have really been the gap. So prices would have started right here. So you would have had traders trying to fade this gap right here, and then what happened was it caught them, right? So it manipulated them, it took out their stops as well. Now, I made a video on my YouTube channel regarding manipulations and why these things happen in relation to supply and demand orders, right? And what I like to do is enter when I see traders being manipulated, right? Or there is some sort of manipulation. Now in real time, I ended up getting in on, this was my entry here, right? And it was just slightly down here, somewhere within that little pin bar right there, the 0.73, I think it was a 4.8 level, right? Stop right above the high. Now, if you see, if I'm right about a manipulation, then I don't really need a wide stop, right? So my stop was maybe around about 6 pips above this swing here, right? Now, in the lead up to this this down move, what I also noticed was that there was GDP figures for the Australian dollar, and what I'm going to do is go to Forex Factory quickly. And on the 5th of December, right, we had GDP quarter on quarter, and what I noticed was that at the start of the week, obviously this would have been the Monday open, and we had, the forecast was expected to be actually below the previous. So I again looked at this and I thought, well, why would there be, a gap higher, right? So even if prices and the GDP, I say prices, but the expectation was for a gap lower, was for a lower, why would, prices be moving higher? So I figured that it was worth a go, because even if it meets expectations, then it shouldn't be that bullish if it's below the previous figure. Just happens to turn out that it was actually way below the expected growth figure, 0.3. So being in this trade, right, and this was the actual morning that the GDP numbers came out, right, but way below expectations, and then you had basically this push lower, right? So from a technical perspective, there was a manipulation around here, but we still had resistance within this zone. We were still buying at value, as this was still into a supply zone, right? So the question, and getting to the original question, is, should I take profit here? Should I take profit here? Now, this is not to say that if you're in this trade with me that you shouldn't take profit here. Everybody has to make, obviously, their own judgment, but I'm going to tell you why I'm not taking my profit here. Because what I do is I actually enter 2 positions, right? So when I entered up here, I entered into 2 positions, right? And I always go for, and you can do this as well, I always go for a 1-to-1 position, right? And then what I do is I let the other one run. Yeah, let the other one run. So I have a decent win rate, above 50% win rate on 1-to-1s, right? So once I reach the 1-to-1, my second position now is, if it comes back and stops me out, I've pretty much broke even. Sometimes I may just move this down to a half position, or even down to basically a break-even position, where I'm actually, if prices do come back up here, I'm still up my 1-to-1 position, but it just depends. So at the moment, this is now a free trade. If prices were to come all the way back up here and stop me out, I haven't lost anything, and I can always move my stop loss if I want to move my stop loss. So my overall target is down here. So why is it down here and not here? So let me zoom back out again, right? And one of the things I do is I understand where ranges are and where ranges are likely to occur. It's something that you should be doing as well. Now, I know that this is likely to be a range. This is considered an expensive or a cheap area, depending on obviously if you're buying the dollar. If this is the dollar, this is going to be a supply zone, is going to be wholesale, cheap, bargain price, potentially. Don't know for sure, but we know that this is an opportunity where I should be potentially be buying based off of obviously my fundamentals, etc. Right? This is going to be, again, if this is a cheap level for the dollar, then this must be an expensive level for the dollar, right? This is expensive. Traders didn't want to buy the dollar down here previously, so prices obviously went higher, right? When I say the dollar, I'm talking about the US dollar. People, traders didn't want to, thought this wasn't expensive. They were taking profit down here. There wasn't that much demand for the dollar, right? And things may have changed from a sentiment perspective as well from the Australian dollar, but this is obviously an expensive area for the US dollar. Now, as we have, I suppose, in between an a cheap area, which is here, which is where I bought, and an expensive area for the US dollar is fair value, right? Now, fair value is a decent area to look to take profit, right? Because at the end of the day, what we're looking at is exchange rates, right? A cheap area was 0.738 for the US dollar, and 0.70 is, obviously the expensive area. So my analysis is that, especially with the fundamental analysis on the Australian dollar, weak growth, etc. I expect, and with obviously the US dollar, Federal Reserve looking to raise interest rates, and really the dollar being the strongest currency out of all the major currencies. If you're looking at the euro, the pound, there's problems in Europe, and obviously in the UK, the Canadian dollar is suffering with oil prices. The US dollar, yes, they have kind of like, the China trade wars, but it's not necessarily affecting the dollar at the moment too much, right? So with all that being said, this is where I'll be looking. Anywhere around here in this zone is where I'm looking to take my actual final profits. Right now, again, it doesn't mean that you shouldn't take profits here, because prices could, you could take profit here and then price. I was expecting an actual pullback and then prices to do something like this, or make its way down, meander. You never really know, but this is what I was expecting to happen, right? But now would be a decent time, if you are in this trade with me, to potentially take profits. Everyone has got different psychology, right? I don't mind holding trades, right? And there's no right way, right? Everyone's looking for the holy grail. Everyone's saying, okay, what's the right way to do things, and what's the, we know what the wrong way to do things. But when it comes to taking profit, as long as you're taking profit and you're comfortable, first of all, you're taking profit, you're making more than you're risking. First of all, is rule number one, and number two is you've accepted the fact that if you take profit here and prices continue to go further down, and you may not get back into this trade, right? But you have to be happy with the fact that, or accept the fact that that could happen to you, right? Or prices could reverse back, right? And if you're comfortable with seeing your pips, right, go back, it's something called brain banked, where we when prices go against us in this trade, we think to ourselves, how much could we have made? And we look at, I could have taken 161 pips and blah 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 blah, right? But you have to understand that money is not yours until you actually press sell or take profit, right? And I'm comfortable with the fact that if this goes all the way back up to zero, then I'm okay with that. You have to really decide beforehand, what you're comfortable with. And obviously fundamentally things could change, and if fundamentally and sentiment wise things do change, then you just readjust. But if nothing changes, then why are we taking profit, right? Why am I going to take profit? Is anything happening to the dollar? Nope. If things happening to the Australian dollar? Nope. Continue to hold, expect these things to happen. And if we do make the this target, then we make the target. Sometimes we do, sometimes we don't, but understand that I'm going to win more than I lose, especially with my one-to-ones. and this is just, you know, a top up, a nice top up, right? Also as well, I forgot to mention this when I was doing my analysis, right, about the level around here. One of the things you can do with trading economics is go to forecasts and go to currencies, and it comes up with this page here, right? And it's something that I always keep my eye on. And you have forecasts, and it's something I mentioned also in the fundamental trading course. All right, if you haven't watched it, definitely watch it. But I guess I'm showing you now. Is the forecast. Now, what trading economics does is it takes into account, you know, they do their mathematical equations and, you know, whatever they do, and they do forecasts about where they think the price of a currency pair is going to be in the, you know, next quarter or two or 3 or 4. Now, I don't pay too much attention to, you know, 2019, like a year from now, but what I do pay attention to is the first quarter and potentially the second quarter, depending on where we are. Now, for the Australian dollar, I suppose so my brain's gone a bit. The figure, the exchange rate they, you know, predicted for the fourth quarter was for prices to be at 0.7133, right? And we're at 0.7186, so maybe about 50 pips or so, right? But what is interesting, and why another layer to why I got involved in this Australian dollar trade, was if you click on it and then you go to this tab up here, forecasts, what you'll notice is a band, right? And this middle band represents the median, or what I would call fair value, and then you have deviation, right? Almost like Bollinger Bands. And what you also notice is that whenever price, it doesn't happen too often, right? But whenever price comes outside of these bands, right, it doesn't stay there for long. So 2017, April, probably May, June times, you can see where prices came outside of the bands, pop back in, came outside of the bands, pop back up. You can see January 2018, around here, prices came outside of the bands and whatnot. Now, we had come outside of the bands right here. So with everything being obviously my bias to be, you know, towards buying the actual US dollar, trying to get short, we have a high probability trade when it comes to you know, the prices being outside of what would be considered, you know, the deviation from fair value, right? And again, you can go through all these other pairs, euro, dollar, right? Go to forecast. You can see when it comes outside the band, it goes around the lows of the band, comes outside here, pops back up, goes outside here, pops back up, goes around here, pops back down, around here. It doesn't stay outside for too long, right? And the same thing with all the others. So I had that in mind, right? Going back to the Australian dollar. And that area there is this area right here. So I had that as confluence, right, with how I trade, supply and demand, looking at where prices are potentially going to range from. Is this an expensive area or a cheap area? There's a bargain area for me, wholesale prices. Prices are now at fair value, right, with the potential for interest rate hikes from the US dollar, right, in the Federal Reserve, and not so good economic news from the Australian dollar, right? We could see prices push further down into, you know, this demand zone, this 7-1 area, which again is probably in alignment with you know, potential targets, right? The dollar is expected to trade at 0.71 by the end of this quarter, according to Trading Economics. And this isn't gospel, by the way, right? This isn't gospel. You shouldn't take this as gospel. This is just a guide, right? You do your analysis first, your fundamentals, and then if things do line up, then you know, take the trade. But I use it as a rough guide, right? And that's pretty much why I am not taking profit at this area right now. Again, if things do change and there's some terrible news comes out for the US dollar, then I will probably readjust. But if things stay as they are, there is really no need for me to exit this trade. All right, so I hope you have found this video useful. If you do have any questions, you can email me at info@trading180.com or leave a comment in the section box below. Please don't forget to like, subscribe and share these videos. It would be really helpful, and hope you have a great trading week. Until the next video, take care.